Good evening, everyone. Namaskar. Good evening. Sat Sri Akal. I guess Game Show, and I hope you all are doing good. And of course, you are studying hard. As always, I am C. Ankit Sharma for your faculty for the session. And today we have our last session of deductions. We will complete our deduction and section 10 AA special economic zone provisions. I have uploaded the notes already of deductions, and the last session MCQ answer I just uploaded 15 or 20 minutes before, and one student asked me, I guess two students asked me for the question of 80G and double G. What will happen? How we will solve the question of 80G and double G. So I've also uploaded that question just the 15 minutes before. So you can go to the link and uploaded it late. So before starting the class, I always say, please follow the rules of the class. That's 4 simple rules. First of all is, all notes are based on the ICAI study material, of course. Second one, please be focused during our class. Please ask me question related to the query. Your question should be related to our topic. Whatever queries, whatever question you want to ask, please focus that it should be related to our topic, what we are discussing. And that's after 40 or 45 minutes, of course, we will go for a query session. You can send me your queries from now, whatever you want to ask, and I'll take all the queries one by one after 40 or 45 minutes. So after all this thing, let's move on to the today's session. Today we have, I just told you, we have deductions and section 10 AA. So we'll finish our deduction provision. We left on 80GG deduction. The last session we covered from section 80C to 80GG. Today we will start from 80GGB and onward to 80U. We will complete our 80GGB till 80U deductions. Then we will do section 10 AA. Then of course our MCQ test also for you. So I hope you all are going to stay with me for this session, and let's get started. Before that, I found a special quotation for you today, of course, and that's actually related to our profession. You can see that. That is, dream big, stay positive, work hard, and enjoy the journey. Your study should be like this. You should dream big, stay positive, work hard, and enjoy the journey. Dream big, that's the most important thing, of course, because if you can't dream, you can't achieve anything in your life. So whenever you start studying, do not dream for 40 marks in each subject and overall 50 marks. Try to achieve 60 plus in every subject. That will definitely going to help you. So make your preparation like this, that you want to achieve 60 plus in every subject. Stay positive, of course, whatever the conditions are, and we can see that conditions are not that good nowadays. Of course, COVID is again coming, and there's a lot of things, but you have to be positive. Trust yourself, be confident, do not lose hope, and just study. Whatever you are doing, just doing good. Work hard, that's a basic principle of this profession, of course. You have to work hard before being a CA, and even after that, of course. And the most important thing, enjoy this journey. This is life, you have to enjoy it. Don't take it like a burden. That will make things worse. That will make things messed up for you. Enjoy this, because this time is not going to come back again. Like Zindagi na milegi dobara. This time will not be you going to again. So after this, let's start the provision. We are going back to our notes. We have left. Moving on to our provision. 80. Last we discussed 80GG and 80GGA. So today we will start from 80GGB. That was donation to political party. In that case, 80GGB, just a moment, let me go back to the notes, the section, then we will start. $80 moving to that, just a second. Okay, fine. That was 80GGB and 80GGC. We were discussing that. We have completed 80GGA. Now moving on to deduction in respect of contributions given by companies to political party. We already discussed a little bit about these deductions also, 80GGB and 80GGC. Now we're reading the provision completely, and these are very simple deduction. If you are paying any donation and contribution to your political party, you can claim it as deduction under section 80 GGB if you are a company. If you are an Indian company, you can claim this deduction under section 80 GGB. And if you are other than a company, then you can claim this deduction under section 80 GGC. 80 GGC is allowed deduction to other than company to all person except local authority. Local authority cannot claim this deduction, and artificially judicial person, AJP. Those are partly or wholly funded by the government. So point number 15, deductions and conditions. Good evening, everyone. Janki Bhatt is saying good evening. Good evening. This section provides for deduction of any sum contributed in the previous year by an Indian company. I already told you, please make short notes of this deduction topic. That will really going to help you. And I believe you are, of course, doing work on it. To any political party or an electoral trust, however, no deduction shall be allowed in respect of contributed by way of cash. That's a very important thing. Remember, in other case of donation like 80G, etc., there is allowed a 2,000 rupees cash donation. You cannot pay more than 2,000 in cash. But in case of 80 GGB and 80 GGC, there is no cash allowed to claim this deduction. Meaning of political party, it should be registered under section 29A of the Representation of the People Act 1951. Illustration says, during the previous year 21-22, Sky Limited, an Indian company, contributed a sum of 3.5 lakh to an electoral trust and incurred expenditure of 52,000 on advertisement in a brochure of a political party. What amount of reduction can it claim if the contribution is in check? Of course, full amount, 3.5 lakh as well as 52,000. That company can claim full deduction of 3,50,000 as well as 52,000. So the eligible amount of deduction is rupees 4,02,000. As simple as that. 80 GGC, it talks about if other than company donate or contribute to political party, that person can claim deduction under section 80 GGC. Almost same provision. There is only one restriction, that local authority cannot claim it, and any artificial judicial person, that is wholly partly funded by the government. This is the main condition of this deduction. The deduction will, however, not be available to a local authority and an artificial judicial person wholly partly funded by the government. Very simple deduction. Now we are moving on to deduction in respect of certain incomes. In the initial topic, when you start this provision, I told you there are deductions on the basis of payment. So till now, what we are technically seeing is we are reading the deductions which is based on payment. You have to pay something to claim that deduction. Whether it's section 80C, whether it's 80 CCC, whether it's CCD, 1, 1B, and 2. 80D, 80 DD, 80 DDB, 80E, 80 EE, 80 EA, 80 EB, 80G, 80 GG, 80 GGA, GGB, GGC. So almost all the deductions was on the basis of payment. If you pay something, then you will be able to get the deduction. But now we are going to see those deduction which is based on some income. So now we will read, we will study, we will see those deduction in respect of certain income. That means you can claim these deduction only if you have earned some certain incomes. So deduction in respect of profit and gains from undertaking or enterprises engaged in infrastructure development, etc., under section 80 IA. So if you are engaged in infrastructure development, etc., and if you are earning profit, if you are earning something out of that business, then a certain amount of deduction for a certain number of years you can claim as a deduction. And what are the conditions? What are the applicability? Who can be the assessee? What is the time duration? What is the amount of deduction? We are going to discuss. Section 80 IA provides a 10-year tax holiday. It's a 10-year tax holiday. That means you do not need to pay any tax on the profit earned out of these specified business for total number of 10 years. to an assessee whose gross total income includes any profit and gains derived by an undertaking or enterprises from an eligible business. Business referred to in section 4, namely, what kind of business what kind of assessee can claim that deduction? That means an enterprise is carrying on the business of infrastructure facility, that means developing or operating and maintaining, or developing, operating and maintaining. So any one kind of activity you can carry forward. Either you are developing infrastructure facility, or you are operating and maintaining, or you are doing everything, developing, operating and maintaining, all of them. Any infrastructure facility. However, such enterprises must fulfill the following condition. There are certain conditions. You should read it yourself because there are general conditions. There's nothing related to our deduction. But they're just trying to clarifying you. They're just trying to explaining you what are the provision or the specific condition. So there are certain conditions. You can read it. It must be owned by a company registered in India or by a consortium of such company, of course. It has entered in an agreement with the CG or state government, of course. It started operating facility on or after 1st April 1995. Rate of deduction, the best thing is it's 100%. The 100% amount of profit you are earning out of that specified business is going to be allowed you as a deduction under section 80 IA. And it is not for 1 year, it will be for 10 assessment year. If you are claiming it from this year, then this year and 9 more years, you can claim 100% profit as a deduction under this section. The amount of deduction available will be 100% of the profit and gains derived from such business for 10 consecutive assessment year commencing at any time during the periods specified in the period of tax holidays as concession below. Period of tax holiday, we have two kinds of option for all eligible business except business mentioned in point number 2. If you are carrying a infrastructure facility, a lot of kind of thing will fall under the definition of infrastructure, like road construction, bridge, toll, etc., etc., etc. So if you are conducting any activity except in point number 2, in that case, you can avail a deduction of 10 consecutive assessment year out of 15 years, beginning from the year in which the undertaking or the enterprises develops or begin to operate. There are some important things to note. Of course, there should be a 10 consecutive assessment year. That means once you have started to take that deduction, then you have to take it for next 10 years. You cannot stop it or you cannot defer it. And that is allowed only after out of 15 years starting. And it will be started, 15 years time period will be started from the year in which business start. We can say it like this. That is a deduction of like this, 15 out of 10 years. What is going to be allowed as deduction? 100% of PGBP from that specified business can be claimed as deduction. That means up to 2020, you have 15 year. Out of this 15 year, any 10 consecutive assessment year can be claimed as deduction. That is all your choice. Clear? So, if you are doing any eligible business and if the facility is like as per point number 2, then this provision will be changed in just like 10 years out of 20 years from the beginning year in which the facility has been started. So if you are falling in the business number 1 eligible business, that the time duration is 10 years out of 15. If it is point number 2, it will be simple like 10 years out of 20 years. Clear? So in case of an infrastructure facility being a public facility like road, including a toll, road, bridge or a rail system, a highway project including housing or other activities, etc., a water supply project, water treatment system, irrigation, etc. In that case, you will be eligible for 10 consecutive years, of course, but out of 20 years beginning from the year in which the undertaking or the enterprises develops or begins to operate the eligible business. Other general provisions are like this: eligible business to be considered as the only source of income. When you are going to give the deduction for section 80 IA to any business, then at the time of giving the deduction, you should assume that this is the only business you are carrying for the purpose of giving this deduction. For the purpose of computing deduction under this section, the profit and gain of the eligible business shall be computed as if eligible business were the only source of income of the assessee. You cannot take any other income at the time of giving the deduction under section 80 IA to that specific business. Condition to exempt profit from housing or other activities being integral part of highway project. Where housing or other activities are an integral part of highway project and the profit and gains have been calculated in accordance with the section, the profit shall not be liable to tax if the following condition have been fulfilled. The profit has been transferred to a special reserve account. If you are carrying an infrastructure facility like highway, etc., but there is some housing activity also and it is a part of your integral part of your highway project, then in case if you want to have deduction, if you want to claim that deduction, then you have to fulfill following more condition also. That the profit has been transferred to a special reserve account and it should be utilized. The same is actually utilized for the highway project, excluding housing and other activities before the expiry of 3 years following the year in which the transfer to the reserve account. So in the year you have transferred the amount to the reserve account, you should use that reserve account within 3 years other than for housing purpose for that highway project. The amount remaining, of course, unutilized or misutilized, going to be chargeable to tax, as always happens in income tax. Audit of account, the deduction shall be allowed to the undertaking only if the accounts of the undertaking for the relevant previous year have been audited by a chartered accountant. By whom? A chartered accountant. By who? A chartered accountant. So this is talking about you. That chartered accountant is you. You can write your name over here. So you will be a chartered accountant and government saying, income tax department say that everything is going right. Who will prove it? Who will approve it? That's a chartered accountant. So a chartered accountant need to be audited to see that this deduction has been claimed correctly. And the assessee furnished the audit report in the prescribed form, duly signed and verified by such accountant before the specified date referred to in section 44 AB. That is the date 1 month prior to the due date for filing return of income under section 139(1). Clear? Transfer of goods and service between eligible business and other business. If an assessee is carrying two businesses, one is eligible for section 80I deduction and other is not eligible for that deduction, then in this case, if any goods or services has been transferred between these business, then the value should be taken as the fair market value. Where any goods or service held for the purpose of the eligible business are transferred to any other business carried on by the assessee or vice versa, and if the consideration for such transfer does not correspond with the market value of the goods or service, then the profit and gain of the eligible business shall be computed as if the transfer was made at market value. Clear? Assessing officer can change it, of course. Section 80 IAB, deduction in respect of profit and gains by an undertaking or enterprises engaged in development of assets. We have a lot of sections to cover. Huge topic today to cover in this section. So that's why we are going through one by one. Quantum of deduction. So now it's saying deduction in respect of profit and gains by an undertaking or enterprises engaged in development of asset. Subsection 1 provides for a deduction of again 100% of profit. You can see that in all of the cases like section 80IA, 80IB, 80IC, 80I, etc. Deduction is always, almost in all cases, is 100%. And a beautiful chart has already been prepared by the institute. We will discuss that also. So that will really summarize all the provision in one place. And that will be really help you to understand and learn all the provision in just a diagram, in just a format. So this is also providing a deduction of 100% of profit, of course, and gains derived by undertaking or enterprises from any business of, if you are in a business of developing a SEZ for 10 consecutive assessment year. Eligible assessee, of course, the deduction is available to an assessee being a developer. We should be a developer whose Gross total income includes any profit and gains derived by an undertaking or an enterprises from any business of developing a SEZ notified on or after 1st April 2005. They are quite boring kind of deduction, of course, but we have to learn it because we cannot leave anything. Option to choose 10 consecutive assessment year out of 15 years to claim deduction. The assessee has the option of claiming the said deduction for any 10 consecutive assessment year out of 15 years beginning from the year in which a SEZ has been notified by the central government. Tax intensive for new section 80 IAC. Objective 80 IAC provided an incentive to startups in order to aid their growth in the early phase of their business. Accordingly, a deduction of 100% of the profit and gains derived by an eligible startup for an eligible business is allowed for any 3 consecutive assessment year out of 10 years, beginning from the year in which the eligible startup is incorporated. So if you start any eligible startup, then you can claim your 100% profit as a deduction for 3 years out of 10 years. Meaning of eligible startup, of course, you must have read it somewhere. Incorporation during the period of 1/4/2006 up to 31st March 22. Total turnover should be less than or equal to 100 crores in the previous year relevant to the assessment year for which deduction is need to be claimed. Holds a certificate of eligible business from the notified IMB International Board, of course. Meaning of eligible business, a business carried out by an eligible startup means there should be some innovation, some development or improvement of product or process or services. A scalable business model with a high potential of employment generation or wealth creation. Conditions to be fulfilled. This incentive is available to an eligible startup which fulfills the following condition. It is not formed by splitting up or reconstruction of a business already in existence. So it should be a new business. It should not be reconstructed or should not be split it up. That will not be eligible for the deduction. There is some exception also. Exception is like section 33B, what we discussed in set-off. That if any business has been destroyed due to any natural calamity, etc., and if you have reestablished it within 3 years, then it will be eligible for this deduction if you are fulfilling a specified condition. Okay. However, this condition shall not apply in the case of an undertaking which is formed as a result of reconstruction, reestablishment, or revival of the business of any undertaking which has been discontinued in any previous year due to extensive damage. Remember, we have discussed this under section 33B for set of provision also. Or destruction of any building, machinery, plant, or furniture owned by assessee and used for the purpose of such business. Further, the reason for damage should be like flood, typhoon, riots, civil disturbance, etc. That means kind of a natural calamity, of course, disastrous. It is not to be formed by the transfer to a new business of a machinery or plant previously used. Now, this is a very important condition. There's a very special condition, and it says, if your business have old machinery, second-hand machinery, then you cannot claim the deduction. But there are 2 exceptions. Let me discuss how. Section says that the machinery should be new. For example, if we are taking 500 lakh rupees plant and machinery in our business, then the provision says 20%, up to 20% can be old. That means previously used. That is allowed. That means 80% should be new. New plant and machinery. So not more than 20% we can use old plant and machinery. If it is more than 20%, you cannot avail the, of course, deduction under this section. But there is very good provision also. It says if any old or previously used machine, fulfill these 3 conditions, then it should be treated as new. Even it is previously used, but we will treat it as a new machine if it fulfills 3 conditions. Condition number 1, it says it should be used outside India. It should be used earlier outside India. So now we are using it in India. So it is second hand but it has been used outside India. If it has been in India, it will be treated as old machine. It should be imported into India, of course. If it has been used outside India, then to use in a special economic zone, to use for the purpose in India in any business, we have to import it by genuine means, of course. It should not be smuggled into India. It should be properly imported into India. And the third condition is very interesting, that no depreciation should be allowed on that machinery under Income Tax Act 1961. This is very interesting condition. It should be used outside India. It should be imported into India, and no depreciation should be used on that machinery as per income tax provision 1961. So if this machinery, if any machinery fulfill, it is used, of course, previously somewhere else, but if it fulfill all three conditions, in which category we will treat it? We will treat it like new machine. For example, if you have 500 lakh machine total, out of which 80 lakh old, those used in India. Clear? 120 lakh is that old which is fulfilling all these three conditions. And remaining 300 lakh is new machine. So we have to fulfill this condition that 80% or more should be new. So this old will be treated as part of new plant and machinery. So total new will be considered as 420 lakh. And that is more than 80% of total machinery. So deduction can be availed. That business can be treated as new business. Clear? Back to the notes. Of course, we will read these conditions in detail in the notes. Exception talks about that three conditions we just discussed in diagram. However, any machinery or plant which was used outside India by any person other than the assessee shall not be regarded as machinery or plant previously used for any purpose, if all the following conditions are fulfilled. Such machinery or plant was not used at any time previous to the date of installation by the assessee used in India. It should not be used in India. It can be used outside India. Such machinery or plant is imported into India. It should be imported by fair means into India, and no reduction of depreciation should be allowed on such plant and machinery as per Indian Income Tax Act 1961. So if all these three conditions is fulfilled, then these machines will be treated as new. Further, when the case of a startup, any machinery or plant or any part thereof previously used for any purpose is transferred to a new business, and the total value of that machinery or plant or part so transferred does not exceed 20% of the total value. So old machines are allowed only up to 20% of total value of machinery and plant used in the business. Clear? The provision of subsection 5 and section etc. Point number 4, deduction in respect of profit and gains from certain industrial undertaking other than infrastructure development undertaking etc. under section 80 IB. This section will be applicable to assessee whose gross total income includes any profit and gains derived from any of the following business activities: an industrial undertaking including a small scale industry undertaking SSI in Jammu and Kashmir, an undertaking which begins commercial production of mineral oils or commercial production of natural gas in licensed blocks, an undertaking driving profit from the business of processing, preservation and packaging of fruits or vegetables or meat and meat products or poultry or marine or dairy products, or from the integrated business of handling, storage and transportation of food grains. Conditions to be fulfilled, amount of deduction and period of deduction. So section 80 IB have more businesses. Like first businesses, if you are doing any activities last SSI in Jammu and Kashmir, and point number 2 and 3. We will discuss one by one benefit to the each and every business. So total we have 3 kinds of business in this section. The rate and period of deduction as follows, of course. First one is for an industrial undertaking including a SSI in Jammu and Kashmir. That deduction can be availed like this. In order to be eligible to claim deduction under section 80 IB, an industrial undertaking must fulfill the following condition. It manufacture or produce any article, things, operate a cold storage plant. In case of manufacturing industrial unit, it should employ 10 or more workers or 20 or more workers. Quantum and period reduction. The amount of reduction for an industrial undertaking in Jammu and Kashmir will be 100% of the profit in first 5 years and 25% of profit for next 5 consecutive years of profit and gain, and 5 years and thereafter 25% of the profit and gain of that business. Total period of deduction should not exceed 12 consecutive assessment year, provided the industrial taking is cooperative society begins manufacture or production of article or thing or operating a cold storage plant between 1493 and 2012. A negative list also has been provided. There are some business for which this deduction cannot be claimed, like cigarettes, cigar, tobacco, etc., etc. Second point was an undertaking which begins commercial production of mineral oils or commercial production of natural gas in licensed blocks. Of course, in order to claim deduction under the section, the undertaking should be engaged in commercial production of mineral oils or commercial production of natural gas in licensed block. The following further condition, there is certain date you should produce your business of commencement should be that after that date. Deduction will be provided, of course, you should be fulfilling the government norms provided by the government time to time basis. The important thing is for us, for the amount and the block for which we can claim this deduction. Quantum and period of deduction. Above conditions are government specific condition. We need not to worry about that. Of course, the license policy, etc. This is for your knowledge purpose only. The main provision is what is the business, what amount or what deduction can be claimed by it, and other general condition. The deduction will be allowed at 100% of the profit from such business for 7 consecutive assessment year, including the initial assessment year, that is the assessment year relevant to the previous year in which the undertaking commenced the commercial production of mineral oils. Always remember, whenever there are years like 10 years reduction, 7-year reduction, 12-year reduction, 8-year reduction, it always includes the first year of commencement and balance year for the purpose of deduction. Third was in this section, an undertaking driving profit from the business of processing, preservation and packaging of fruits, vegetable, meat, etc., etc. In order to claim deduction, the undertaking should fulfill the following condition. There are certain conditions. Again, these are conditions. You can read yourself, general condition. The important thing is quantum and deduction. Of course, now deduction is for initial 5 year, 100% of your profit will be allowed as deduction. And the balance number of 5 years, you can claim deduction for 25% of profit. And if you are a company, that will be substituted by 30%, of course. These are for reading purpose. You can read it. Of course, these are general, not general condition. It's for your clarification. 80 IBA, deduction and dispatch of profit and gain from housing project. Now, this is a very interesting deduction. This is very, very important also, and this is very smartly drafted. What was happening when there is a builder who is carrying on a housing project and he promised to the customer, to his consumer, that we will provide you project within like 3 years, 5 years, 2 years, 1 year. And whatever was happening, technically, that was not, practically it was not happening. If we promised to deliver you the house in 2 years, so naturally it's not going to be in completion in 2 years, it will be like 4 years and 5 years. So government trying to make strict provision upon builders that you should complete your project within a certain time. Government has passed a bill, RERA, etc. So that consumers should get their houses within a specific time frame which is promised by the builder, developer, etc. So government is doing that also. They are providing penalties, strict nets also in all other acts. But income tax actually provide a very beautiful, very wonderful, very smartly drafted deduction to encourage that builders to complete their project in a certain time. And what it says, the deduction says that if a builder is running a housing project or a rental housing project and fulfilling certain condition of section 80 IBA, then 100% profit earned out of that project can be claimed as deduction. Listen carefully. It is you can say it's a kind of a perquisite, it's kind of a benefit provided to the builder. So he will complete his project within a time frame to get this deduction. So if a builder is about to earn like 5 crore rupees from a housing project, and if he's fulfilling section 80 IBA norm, then what will happen? His whole amount of profit is going to be allowed as a deduction. So income tax says that if you are fulfilling certain condition for a housing project or rental housing project, then whole amount of your profit out of that project will be allowed as deduction under section 80 IBA if you are completing it within a certain time. So what will happen now? Builder will try to complete within time, because if it will happen, he can save a huge amount of tax. Okay. Section 80 IBA provides impetus to affordable housing sector to achieve the larger objective of housing for all. What is a quantum? Beautiful quantum, of course, where the gross total income of an assessee includes any profit and gains derived from the business of developing and building housing project. An amount equal to 100% of the profit and gain derived from such business is allowed as deduction under section 80 IBA, subject to fulfillment of certain conditions, of course. The benefit is also available for the rental housing project also. The business of developing and building rental housing project, an amount equal to 100% of the profit and gains derived from such business, also allowed as a deduction. What are the conditions? The project is approved by the competent authority after 1st June 2016, but on or before 31st March 22, and a time period has been made 5 years. This is very important, of course. The project is completed within a period of 5 years from the date of approval by the competent authority. So the date you are getting the approval, you need to complete it within 5 years if you want to claim that deduction. What will happen? If you are not able to fulfill that condition, what will happen? Universal rule in income tax, the deduction you have claimed is going to be taxable, of course. However, in case where the approval in respect of a housing project is obtained more than once, the project shall be deemed to have been approved on the date on which the building plant of such housing project was first approved by the authority, of course. And the project shall be deemed to have been completed within a certificate of completion of project as a whole as obtained in writing from the competent authority. The carpet area of the shops and other commercial establishment, including the housing project, does not exceed 3% of the aggregate carpet area. The commercial establishment total area should not exceed 3% of the carpet area. So we can say 90% of carpet area should be used for housing purpose. Additional condition about the size, etc. So additional condition to be fulfilled if the project is approved by the authority before 1st September 2019. So we have certain kinds of condition, like the size of plot should not be less than 1000 square meter. Not more than 30 square meters should be the residential house carpet area. Percentage of floor area should not be less than 90%. These are for the metro city like Delhi, Chennai, Calcutta and Mumbai. For other cities, the plot area should not be less than 2000 square meter. The residential unit area should not be more than 60 square meter, and the area which was 90% in metro cities should be not less than 80% of the floor area ratio. It was like before 1st September 2019. For the examination purpose, I believe these conditions are more important because that's 1st September 2019 or after. The condition has been changed. First is same, 1000 square meter, of course, 60 meter. The cities has been actually include many more cities than 4 only. Fine. Other conditions are same. Other place like 2000, the 690 square meters and 80% area. So you should, examination purpose, you should read or learn these conditions which is applicable from 1st September 2019 onward. The project is the only housing project on the plot of land, of course. The assessee maintains separate books of account in respect of the housing project, and the very important point, the stamp duty value of a residential unit in housing project does not exceed 45 lakh rupees. No deduction for person executing the housing project as a work contract. If it is not your housing project, if you are working as an outsourced person, then you cannot claim it as a deduction for yourself. It should be your project, of course. An assessee who merely execute the housing project as a work contract awarded by any other person including the central state government, would not be eligible for the deduction under this section. Consequence of non-completion of housing project, what will happen? The deduction you have claimed should be liable to tax as your income. In a case where the housing project is not completed within the period of 5 years from the date of approval by the competent authority, and in respect of which a deduction has been claimed and allowed under the section, the total amount of deduction so claimed and allowed in one or more previous year shall be deemed to be the income of the assessee, chargeable under the head PGBP, of course. No deduction under any other provision, universal provision of the income tax. If you have claimed any deduction of that profit under this section, then you cannot claim it in anywhere else in the Act, of course. Meaning of certain term, if you want to know what is the meaning of carpet area, you can read this. If you want the meaning of competent authority, explained over here. Floor area ratio, explained over here, of course. Renting housing project means, you can read it from here. Residential unit meaning, everything has been explained by the institute in detail. So you can read it, you can enhance your knowledge by reading it, all these things. Tax holiday in respect of profit and gains from eligible business of certain undertaking in northeastern state, section 80 IEA. This is specifically made for some eligible business, those are in northeastern state. The section provides for an incentive to an undertaking which has, during the period between 1st April 2007 and 1st April 2017, begins in any of the northeastern states. Status are specific: Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, and Tripura. So you should learn these states' name, but this deduction is only provided if that eligible business is working in these areas. To manufacture or produce any eligible article or thing, to undertake substantial expansion, to manufacture or produce any eligible article or thing, or to carry on any eligible business, of course. So what is the meaning of eligible business? Explained. Eligible article or thing, of course. Substantial expansion. What is the meaning of eligible business, of course? Quantum of deduction in period. In this deduction, I personally feel you should learn the name of a state also. I guess there are all, just a second, there are total 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8 states name. So you have to learn them. It's Arunachal Pradesh, it's Assam, it's Manipur, it's Meghalaya, it's Mizoram, it's Nagaland, it's Sikkim, and Tripura. There are 8 states name over here. So we should learn them, of course, for examination purpose. Okay, so that was Andhra Pradesh. Then we have Assam. In short, we can write those names like this. Then we have Manipur. Then we have Meghalaya. Then we have Mizoram. Then we have Nagaland. Then we have Sikkim and Tripura. So in short, if we can write it like AP, AS, MA, ME, MI, NA, SI, TR. So I'm just trying to find a way you to learn them. We can learn it like this. Okay, we can write like this. I, of course, that is Mizoram. We can write it like this. Me, SI, TR, in is like in Andhra Pradesh and Assam. Okay, we can learn it like this. I just trying to make a trick for you. Like we can read it, Meena Mami, like Meena. You can learn the name Meena Mami. Fine, like maternal auntie, we call them Mama and Mami. So we can learn it Mami. Fine. So we can learn a name like Meena Mami. In Hindi, if you know, we can write it like Meena Mami. SITR we can use like sitar, Meena Mami, sitar. Sitar, you know the instrument, music instrument, sitar. So we can use it like sitar. In Hindi, we can write it like this. So sitar, we can take it. So Meena Mami sitar in Andhra Pradesh. You can read it or you can learn it very easily. These 8 states you can learn like this: Meena Mami sitar in Andhra Pradesh. So MI stands for Mizoram, Nagaland, Manipur, Meghalaya, and Sikkim, and Tripura, and Andhra Pradesh and Assam. You need to learn like this. So this is my trick. You can help yourself if you want to find any other trick. Moving on to our notes. Okay, so these were the 8 states. I have learned it fine. It's so simple now. I can learn it like this: Meena Mami sitar in Andhra Pradesh and Assam. Good. So moving on to the provision, quantum of deduction and period, where the gross total income of an assessee includes any profit and gains derived by such an undertaking. A deduction of 100% of the profit and gains derived from such business for 10 consecutive assessment year. It's not Andhra Pradesh, I guess. It's Arunachal Pradesh. Yes. My bad, of course. Let me correct it. It's Arunachal Pradesh. Yes, sorry. It is like Arunachal Pradesh. Correct. Still, now our term will be like Meena Mami sitar in Arunachal Pradesh. Thank you. Who just corrected it? Jan keyword. Very nice. Back to the notes. Of course, Arunachal Pradesh. Correct. So, the deduction is like 100% of profit and gains derived from such business for 10 consecutive assessment year commencing with the initial assessment year shall be allowed in computing the total income of the assessee. Initial assessment year means the year, of course, from the year in which businesses begin, etc. No deduction, of course, in any other section or any other chapter if you have claimed the deduction over here, not even section 10AA. Maximum permissible deduction while computing the total period of 10 years, the period for which the benefit under section 80 IC has already been availed, if any, shall also be included. Now, this is the summary I was talking about. Institute has made a very beautiful diagram, a very useful diagram, we can say, or very smart diagram to make you learn all the provision in a single diagram. So you can read it. This is called a summary of all the deductions from section 80IA to 80IE. This will really help you to learn these deductions very smoothly. So again, thanks to Institute once again, thanks to Board of Studies once again. These are all deduction, we just read it over here. Moving on to the deduction in respect of profit and gains from business of collecting and processing of biodegradable waste. If you are running a business, and the business is for collecting and processing of biodegradable waste, so that is, you are doing benefit of the country in 2 ways. You are earning profit, of course, you are giving employment, and you are using waste. You are consuming the waste into producing natural gas, biogas, etc. for the benefit of country and environment also. So government, of course, want to encourage that kind of business, and it's providing the deduction of section 80JJA. The deduction is allowable where the gross total income of an assessee. This is also a deduction based on your income. The deduction is allowed where the gross total income of an assessee includes any profit and gains derived from the business of collecting and processing or treating of biodegradable waste for power generation, of course, for producing biofertilizer, for producing biogas, and making pellets or briquettes for fuel or organic manure. Quantum, whatever the business you are running, the profit for next 5 consecutive assessment year is going to be allowed as deduction. So you need not to pay any tax on this business profit for next 5 years, including the year in which you commence that business, of course. The deduction allowable under this section is an amount equal to the whole of such profit and gains from for a period of 5 consecutive assessment year, beginning with the assessment year relevant to the previous year in which the business commenced. So let's see the query session. I'm not finding. Okay, fine. Navita Goel is asking, sir, if SSC stop eligible business activity in between 10 years, then what will happen? You'll not be able to get the deduction for further years, of course. So this will happen, of course. He'll not be eligible to take the deduction in future years. But if he violate any other condition, then the profit which is allowed as deduction is going to be taxable again. Now, a very important deduction from the point of view of examination, for the purpose of numerical purpose. You can see in most of the deductions are not based on individual numerical. They will be part of a numerical of GTI, etc. for some 1 marks, 2 marks, or 3 marks. There are very few deduction which can be asked as a separate question of 4 marks, as an individual deduction. I feel like 80D has that kind of characteristics. It can be asked like a separate numerical to you. Any deduction can ask, but it's from my vision if we can see. So a separate deduction, 4 marks, 3 marks question needs a certain kind of numerical treatment. So 80D was that kind of characteristics, 80G has that kind of characteristics, 80G had that kind of characteristics. And I also feel 80JJA also is a very important deduction which can be framed as an individual question in examination. And it is for deduction in respect of employment of new employee. So if you are actually hiring some new employee in your business and fulfilling the condition in this section, then you can claim additional deduction. Whatever you are paying as a salary to them, you will claim that salary in P&L debit, of course. Imagine if 10 lakh rupees is eligible for the deduction of section 80JJ as a salary, so that 10 lakh you're already being claimed as expenditure in your P&L. And this is called additional 30%. Why additional? Because that 10 lakh has been claimed by you. And in this section, 30% of that 10 lakh can be allowed as deduction out of GTI. So that 10 lakh has been claimed as PGBP expenses. And this 30% for that 10 lakh rupees, that means 3 lakh rupees can be claimed as additional. So where the gross total income of an assessee to whom section 44AB apply, that means tax audit applies, of course, includes any profit and gains derived from business, a deduction of an amount equal to 30% of additional employee cost incurred in the course of such business in the previous year would be allowed for 3 assessment year, including the assessment year relevant to previous year in which employment is provided. So if you have provided new employment in current year, then additional 30% of the additional employee cost you can claim in this year and next year and next year. There are certain conditions need to be fulfilled. Of course, the business should not be formed by splitting up or the reconstruction. The business is not acquired by SSE by way of transfer from any other person or as a result of any business reorganization. That means the employment should be new. If it is a splitting of the business, then the employee will be always old. Of course, there should be a new appointment. There should be a new employment. The report of the accountant given the prescribed particular has to be furnished before the specified date. Of course, again, here we are. We are always there in income tax department, almost in every provision, every chapter, in every kind of reports, in every kind of certificate, in every kind of these kind of provision. We need a chartered accountant. That means department needs you, me, us. So what we should do, what technically you should do, you should be a chartered accountant as soon as possible. What is the meaning of additional employee cost? Total emolument paid or payable to additional employee employed during the previous year. In the case of an existing business, the new additional employee, those are appointed, that employee's salary, that employee's payment, that is going to be taken for the purpose of deduction. And if you are a new business, then of course the whole appointment of new additional employee will be treated as for the purpose of additional employee definition under section 80JJA. So in the case of existing business, what is the provision? The additional employee cost shall be nil if there is no increase in the number of employee from the total number of employees employed as on the last day of the preceding year. Emoluments are paid otherwise then by an account pay check or account pay bank draft, or by using electronic clearing system, of course, IMPS, RTGS, NEFT, etc., will not be eligible for that deduction. So payment should be in these form, not other than in this form. In the first year of a new business, the paid or payable, the emoluments paid or payable to employees employed during the previous year shall be deemed to be the additional employee cost. That is not that simple. It's not that simple that whatever employee you are appointing, those additional wages are going to be allowed as deduction. No, there are certain more conditions also. We need to discuss those important conditions more. An employee, eligible employee, who will be called an additional employee or eligible employee, there is certain condition. Only those eligible employee payment can be considered for the purpose of deduction under section 80JJAA. An employee who has been employed during the previous year and whose employment has the effect of increasing the total number of employees employed by employer as on the last day of the preceding year. So following employee cannot be eligible to be the part of this deduction amount. Exclusion: an employee whose total emoluments are more than 25,000 per month. So if any employee is getting total value more than 5,000 per month, then that is out of the definition of additional employee. So his payment cannot be considered for the purpose of this section. An employee for whom the entire contribution is paid by the central government under the employee pension scheme, etc. So we can say the central government or government employee cannot be the part of this deduction. Third condition is very interesting. An employee employed for a period of less than 240 days. So if you are employed for a period of less than 240 days, then again you will not be eligible for the purpose of additional employee definition. But this 240 days will be replaced in case of apparel or footwear or leather products to 150 days instead of 240 days. So for other business, the limit is 240 days. But for the business of apparel or footwear or leather products, the time has been reduced to 150 days. So if you are working in these three industries and employed for more than 150 days, you will be an additional employee. But in case of other employee, you need to be employed for 240 days or more to be eligible for the definition of additional employee. So we exclude those employees, those payments are more than 25,000 per month. Those technically we can say government employees. C say those employed for less than 240 days or less than 150 days in a previous year, and an employee who does not participate in the RPF. So if any kind of employee who does not participate in RPF, that is also out of the definition. So we can say those are generally called casual workers. Those are not permanent employees. Those are casual employees. Those are also out of this league. So the provision note, this is really important. There has been amendment regarding that, and it is really important. Like 240 days and 150 days conditions need to be fulfilled to be the part of additional employee definition. What if some employee has been employed for 100 days only, like somebody has been appointed in January? So he will be employed only for January, February and March. That means a total days almost like 90 days. So technically he won't be eligible for this kind of definition, but government has made a very good provision, a very good amendment, that if somebody has employed in the year of appointment for less than 240 or 150 days, but in the next year he has been employed for more than 240 or 150 days, then he will be eligible for the deduction from the next year. Technically, we will assume that he is the new employee for the purpose of next year. So we can say it like this. Like for previous year, 2021-22, employee has been appointed for 200 days. Other than those industries, except. So there are limit is 240 days. So he is not fulfilling this condition in this year. So we will not consider him for additional employee in this year. he will not be eligible for 80JJAA deduction. Clear? But if in previous year, 22 and 23, if he is appointed for more than 240 days, and also fulfilling other condition like salary is less than 25,000, he is not a casual employee, of course, then for this year he will be treated as an additional employee, and additional payment will be considered for deduction under section 80JJAA. It's a very welcome amendment made by the government, of course. So if an employee is employed during the previous year for less than 240 days or 150 days, as the case may be, but is employed for a period of 240 days or 150 days, as the case may be, in the immediately succeeding year, then he shall be deemed to have been employed in the succeeding year. Accordingly, 30% of that person eligible payment will be taken for the purpose of this deduction. Accordingly, the employer would be entitled to a deduction of 30% of additional payment. What are the payments will be considered for the purpose of this? You can read the definition, of course, it is very simple. Now here is the example. Mr. Vikas has commenced the business of manufacturers of computers on 1401. He employed 420 new employees during the previous year, 21-22. So we need to find it out. He is doing the business of computer. So that means he is not in that three specific business. So the days requirement should be more than 240 days. So 75 employees has been appointed. 75 employees has been appointed for more than 240 days because they have appointed on 1/4/2021. So this condition has been fulfilled. And they are regular also, so they are not casual also. And their salary is less than 25,000. So all conditions are fulfilled. So they are eligible for additional employee definition. So 75 employees, salary for the whole year, like from 12 months into 24,000, will be eligible as deduction. The second says 125 employees appointed on 1st May 2021, and they are also regular. So they are also fulfilling all the condition except this, because their salary is more than 25,000. So they cannot be included for the purpose of section 80JJAA. 120 employees appointed on 1st July 2021. That means they are appointed for more than 240, but they are casual. So again, they cannot be allowed for deduction. 100 is appointed on 1st September 2021. They are regular. Their salary is 24,000. So they are fulfilling this condition, but they are less than 240 days because from September, October, November, December, January, February, March, almost 7 months. So it is not more than 240. So they are also not eligible for this deduction. So for this previous year only, they are allowed for this deduction. They can be claimed 30% of their payment made to these employees as a deduction. And they can be eligible for this deduction in the succeeding year, of course. Moving on to the solution, of course. So 80JJAA is applicable for only 24,075 employees. Other employees are not form part of this deduction for this year, of course. So 75 was the eligible employee, of course. The other left, those are the appointed last, can be claimed as deduction in the next year, of course. If Mr. Vikas is engaged in the business of manufacturing of leather product, then the first number of employees, that was 75, as well as 100, both will be eligible because 150 days limit will be applicable, and 75 and 100 both are going to fulfill it. So whatever their payment received by them will be 30% of that can be claimed as deduction. So according to me, 80JJAA has that kind of character that it can be asked. It can be asked for the individual question of 3 or 4 marks. Next is deduction in respect of certain incomes of offshore banking units and international financial service centers. The section is applicable to the following assessee: a scheduled bank having an offshore banking unit in a SEZ, any bank incorporated by or under the law of the country outside India and having an offshore banking unit in a SEZ. So if you have a scheduled bank and if it's a unit, offshore banking unit in SEZ, it is eligible. If you're a bank incorporated outside India but having an offshore banking unit in SEZ, you are also eligible. and if a unit of an international financial service center, they are also eligible for this kind of deduction. What are eligible income? Of course, the deduction will be allowed on account of the following income included in the gross total income. Income of such assessee should contain income from offshore banking unit in SEZ. The offshore banking unit, which is situated in SEZ. So whatever income it will earn, that is eligible for this certain kind of deduction. Income from business referred to in section 6(1) of the Banking Regulation Act with an undertaking located in a SEZ, any other undertaking which develop and operate or operates and maintain a special economic zone. Income from any unit of the International Financial Service Center from its business for which it has been approved for setting up a center in SEZ. Income arising from the transfer of an asset being an aircraft or a helicopter or an engine of an aircraft or a helicopter or any part thereof, which was leased by a unit of an IFSC referred to in clause number C to a person subject to the condition that the unit has commenced operation on or before 31st March 2024. So these are the required income which are eligible for the deduction. What is the quantum of deduction? That is 100% of such income for 5 consecutive assessment year. Thereafter, 50% of such income for next 5 consecutive assessment year, of course. The all deductions are like this, of course. If you have an international financial service center, then the condition of deduction and quantum will be changed. That is 100% of such income for any 10 consecutive assessment year out of 15 years. Condition: the following conditions have to be fulfilled for claiming deduction under this section. Of course, the most important condition is this. You can write your name over here. The report of a chartered accountant in the prescribed form certifying that the deduction has been correctly claimed. We need to certify that the deduction has been correctly claimed, of course. Moving on to other deduction in respect of intercorporate dividends, section 80M. Eligible of assessee, it says deduction under this section. This is also a very interesting deduction. Deduction under this section would be allowed to a domestic company only. If it is gross total income includes in any previous year any income by way of dividends received from any other domestic company or foreign company or a business trust. Section 80M says that if you are a domestic company and if you receive any dividend from any other domestic company, foreign company or business trust, then you can claim this deduction, but this is not the amount deduction you will get. There is a comparison. The amount you received as a dividend and the amount you declared as a dividend, whichever is lower, will be allowed as deduction. So here is the new concept. It says the amount you receive as a dividend and the amount you paid as a dividend, whichever is lower, will be allowed as a deduction under section 80M. Quantum of deduction says in computing the total income of such domestic company, a deduction of an amount equal to the amount of dividend received from the other domestic company or foreign company or business trust as does not exceed the amount of dividend distributed by such domestic company on or before the due date. In simple word, deduction under this section would be amount of dividend received from other domestic company or foreign company or trust or dividend by domestic company, whichever is lower. Like for an example, X Limited, a domestic company, received 10 lakh from Y Limited, a domestic company. And on 15th May, X Limited declared 5 lakh as a dividend. So what will be the deduction? Deduction will be lower. That will be 5 lakh. So under section 80M, you can claim 5 lakh as a deduction. Where any deduction in respect to the amount of dividend distributed by the domestic company has been allowed under this section in any previous year, no deduction shall be allowed in respect of such amount in any other previous year. Meaning of due date, of course, section 139(1). Deduction in respect of income of cooperative society under section 80P. 80P is for cooperative society. So now two deductions like 80P and next deduction of this, they both are for cooperative society, etc. Applicability under this section. Certain specified income of cooperative society would be allowed as a deduction, provided such income is included in the gross total income of the society. What is the income and quantum reduction? We need to read it. Deduction in respect of profit attributable to certain specified activities, 100% deduction shall be allowed. Remember, 100% deduction should be allowed if any profit earned out of those following activity. To any one of the following of the more activities to a cooperative society engaged in carrying on the business of banking or providing credit facility to its member. If society is running a business of banking or providing credit facility, that is eligible for claiming the deduction. A cottage industry, a marketing of the agricultural produce grown by its member, or the purchase of agriculture implements, seeds, livestock, or other articles intended for the agriculture or for the purpose of supplying them. The processing without the aid of power of the agricultural produce of its member, or the collective disposal of the labor to its member, or fishing and other allied pursuits such as catching, curing, processing, preserving, storing, and marketing of fish, or the purchase of material and equipment in connection therewith for the purpose of supplying them to their members. So a lot of activities are there. But again, there is one more clarification that in case of point number 6 and 7, that means in case of fishing and the collective disposal of the labor, that is going to be allowed as deduction. These income, if they are fulfilling following more condition, will be available only in the case of those cooperative societies which under their rules and bylaws restrict the voting rights to. This is very complicated, conditions and condition, but let me tell you again, do not tense, because the main condition for the purpose of income tax, you need to learn who is eligible to the deduction, what income is eligible to the deduction, what amount of deduction you can get, what the time duration you can get the deduction, and some other more condition which is related to your provision. Only in the case of those cooperative society which under their rules and bylaws restrict the voting rights to member who contribute there, you can read it. Of course, these are conditions like voting rights, etc. Deduction in respect of profit of primary cooperative society. 100% of the profit and gains of the business would be allowed as deduction from the gross total income of the cooperative society in case of a primary cooperative society engaged in supplying milk, oilseeds, fruits, or vegetables. So just give me a minute. I'll be back. Just give me a minute. Just a second. So deduction in respect profit and gains of the business would be allowed as deduction from the gross total income of the cooperative society in case of a primarily cooperative society engaged in the supplying of milk, oilseed, fruits, etc. You can read it, of course, general provisions. Deduction in respect of other activities. A cooperative society which is engaged in activities other than to those mentioned above, either independently or for in addition to all or in any other activities, is specified as eligible for deduction up to 50,000 to the extent of its business income arising from other activities. The limit of 1 lakh in the case of consumer cooperative society. If any dividend etc. received by it, it's also going to be exempted. Any income arising to a cooperative society by way of any interest and dividends derived from its investment with any other cooperative society is deductible in full under this section. Deduction in respect of letting out income for certain purpose. The income derived by a society from the letting out of godowns or warehouse for storage, processing, or facilitating the marketing of commodities is fully allowable as deduction. There is 20,000 rupees provision also. You can read it out, of course, not that important for the examination purpose. Meaning of urban consumer society means deduction under other section of chapter 6 of the Act. Not eligible cooperative society, of course. Regional rural banks is for reading purpose. There's nothing that much important. Deduction in respect of certain income of producer company. Section 80P. Under Section 80P, 100% deduction is available in respect of profit of cooperative society which provide assistance to its member engaged in primary agricultural activities. A similar benefit has been extended by insertion of a new Section 80PA to farm producer having a total turnover of less than 100 crore in any previous year, whose total income includes any profit and gains derived from eligible business. They are very, very boring deduction, of course. There is nothing technical, so we can explain it, of course. Meaning of eligible business, you need to read, of course, quantum deduction, 100% of profit and gains attributable to eligible business for the previous year, relevant to assessment year 1920 to 24 and 25. Meaning of certain terms, you have to read it, of course. There are general provisions. Now 13 deductions again. Now it's an important deduction. It's an interesting deduction. Deduction in respect of royalty income, etc. of authors of certain books other than tax book. So this deduction is available for royalty income to authors of certain books, and that should not be textbook. That should be other than textbook. Like the books, we can call it novel, comics, etc. There should be books other than textbook. There should not be a book in which somebody has copy-paste something. There should be a book which has been written with some innovations, some ideas, some stories, etc. like Harry Potter, etc. Eligible associate quantum of deduction under Section 80QQB, deduction of up to a maximum 3 lakh is allowed to an individual resident in India, being an author, including a joint author, in respect of income derived by him in the exercise of his profession. That is, the deduction shall be the income derived as author or 3 lakh, whichever is less. This income may be received either by way of a lump sum consideration for the assignment or grant of any of his interest in the copyright of any book. Such book should be a work of literary, artistic, or scientific nature of or royalties, copyright, etc. Whether you receive that royalty in lump sum or installment, doesn't matter. That is eligible for deduction under Section 80QQB. This deduction shall not, however, be available in respect of royalty income from brochure, commentaries, diaries, guides. Of course, they are treated as a textbook. So we need those authors. Those are writing technically those books which are other than textbook. Textbook includes journal, magazine, newspapers, pamphlet, etc. So they are not eligible for this deduction. Manner of computation deduction. For the purpose of calculating the deduction under this section, the amount of eligible income, royalty or copyright fee received otherwise than by way of lump sum, before allowing expenses attributable to such income, shall not exceed 15% of the value of the book sold during the relevant previous year. So whatever the amount or royalty you are receiving, we should find out that value and 15% of the book value sold. So that cannot exceed 15% of the book value of sold. So that means 15% of book value and the royalty you earn, whichever is lower, will be going to be a part of your eligible amount. And out of that amount, we need to deduct the proportionate expenses. Then we will find out the deduction which can be available under Section 80QQB. However, this condition is not applicable where the royalty or copyright fee is receivable in the lump sum in lieu of all right of the author in the book. Furnishing of certificate in the prescribed form. Period for repatriation of income earned outside India, generally 6 months from the end of the previous year. That means 30th September, but RBI can extend it to any other limit. Like for example, we have this question. Mr. Akash earned royalty of 288 from a foreign country for a book authored by him, being a work of literary nature. The rate of royalty is 18% of the book. The expenditure incurred by him for earning this royalty is 40,000. The amount remitted to India till 30th September 2021 is 2,30,000. The renewing amount was not remitted till 31st March 22. compute the amount includable in the gross total income of Mr. Akash and the amount of deduction which he will be eligible for this deduction. Clear? Under section 80 QQB, the net royalty we need to find it out. Like we have received 2,88,000. That was 18%. So we need to find out the 15%. So it's simple proportionate method of maths. 288 was equal to 18%. So 15% will be 2,40,000. But the amount of royalty remitted into India is 2,30,000. So which is lower? Like this. 2,40,000 or 2,30,000, whichever is lower is 2,30,000, and the expenses we made is 40,000. So the amount comes, that is 1,90,000 or 3 lakh, which is a fixed limit under this section. Whichever will be lower is going to be allowed as deduction under section 80 QQB. If the whole rights has been transferred under this section, then this comparison will not be done. The amount brought into India, and that amount is eligible for the amount, and we need to deduct the expenses we made for this purpose, and that will be the eligible amount in respect of this. Like we can say this. For 80 QQB, we can written this reduction like this. Either all rights have been transferred, if all rights have been transferred, then the amount remitted into India up to the specific date, that will be taken, and we need to deduct the expenses. This value or 3 lakh, whichever is lower will be the deduction. If all rights have not been transferred, then remitted value, of course, same as first case, or 15% of book value sold. Whichever is lower will be called eligible amount, and now we will deduct the expenditure out of it. And the balance value or 3 lakh. Lower will be the deduction eligible under this section. 80 RRB is for royalty on patents. 80 QQB was royalty for copyright, and it is now royalty on patents. The deduction shall be available only to a resident individual who is registered as the true and first inventor in respect of the invention, of course. Quantum again same. The section allows deduction to a resident individual in respect of income by way of royalty of a patent registered on or after 1403. Eligible income, this deduction shall be restricted to the royalty income including consideration of transfer of right in the patent or for providing information for working or use of a patent. The deduction shall not be available on any consideration for the sale of product, etc. In respect of such income which is earned from source outside India, the deduction shall be restricted to a sum brought to India within 6 months. Rectification assessment, where patent is revoked subsequently, the amount you will claim as deduction is going to be taxable. So we are left with the other deduction. Let me take the query, then we will go for the other deduction provisions. $80JJAA new business can claim deduction. So why deduction conditions are given for existing business? No, both can claim a deduction. Existing business, if employed new employees, then they can claim a deduction. If ABC limit actually acquired, okay, let's do one thing. I'll go on a break right now and will be resume. Then we'll take further classes. So Ram, Mr. Ram is there? Just a sec. Yeah, 10 minutes break. Yes, sure. Okay. Okay. Welcome back. So after a short break, we are over here again to conduct and complete our deduction provision. So there's some electricity issue. I don't know what's happening in my area, but it'll be fine. We are continuing it, fine. So you can able to listen my voice properly to see the chart. That will be enough for us. Just a second. Fine. So deduction in respect of other income, we just completed section 80 QQB and we just completed section 80 RRB both. So after that, let's continue with the deductions and section 80 TTA. We are going to discuss section 80 TTA, and that is deduction in respect of interest on deposits in saving accounts. Please read it carefully. It's saving account only. So deduction. Eligible assessee and quantum deduction is very simple. Like if you have a saving account interest, you can claim this deduction. Section 80 TTA provides that in case the gross total income of an assessee being an individual or a HUF includes any income by way of interest on deposit in a saving account, not being the time deposit. It's not interest on FDRs. It's only for saving account. Then deduction up to 10,000 in aggregate shall be allowed while computing the total income of the assessee. So maximum deduction you can claim is 10,000 or the interest on saving account, whichever is lower. So deduction shall be allowed in case of saving account is maintained with, of course, a banking company, a society, or a post office. This deduction is not available for a senior citizen. Those are available in deduction section TTB. TTB is again very simple deduction. Deduction in respect of interest on deposit in case of senior citizens, and they are allowed to take interest deduction on saving account as well as FDRs account also, and the limit is also increased for them. A senior citizen, a resident individual who is of the age of 60 years or more at any time during the relevant previous year, whose gross total income includes income by way of interest on deposits with a banking company, with a society, corporate society, or a post office. Deduction amount quantum is 50,000 on interest, of course, whichever is lower. Non-availability of reduction to a partner member with deposit held by a firm or AOP or BOI. Simple. This is an example. You can read it, of course. Other deduction, section 80U. We already discussed the deduction for handicap under section 80DD. 80DD says that if any person who is maintaining a handicap and doing expenditure for his medical treatment, etc., then the person who is doing that for that handicap, he can claim the deduction, provided the handicap should be a relative and will be wholly dependent upon that person. So if Mr. A is handicapped and Mr. B is maintaining him, so 80DD is for Mr. B, not Mr. A. Now, what if handicapped is not dependent upon anyone? He or she is earning herself or himself. So for the benefit of them, deduction under section 80U has been made. Section 80U harmonized the criteria for defining disability as existing under the income tax rule with the criteria prescribed under the person with disability. Eligible assessee, of course, the section is applicable to a resident individual who at any time during the previous year is certified by the medical authority to be a person with disability. The benefit of deduction of this section has also been extended to persons suffering from autism, cerebral palsy, and multiple disabilities. Quantum is again same, 75,000 in case of normal disability, and for severe disability, if it is having more or 80%, then it's 1,25,000 fixed. The actual amount of expenditure is irrelevant. Remember, the actual amount of expenditure is irrelevant. Condition: the assessee claiming a deduction of this section shall furnish a copy of the certificate issued by the medical authority in the form and manner as may be prescribed, along with the return of income under section 139 in respect of assessment year for which the deduction is claimed. Where the condition of disability require reassessment, a fresh certificate from the medical authority shall have to be obtained after the expiry of the period mention on the original certificate in order to continue the claim, the deduction. So here we finished our, of course, deduction topic. We have left with section 10AA, of course, special economic zone, and our, of course, MCQ test. Let me take the queries you asked, of course. Okay, so Namita is asking 80 double J new business. Okay, I have already answered it. Namita Goel again asking, if sir, if ABC Limited business acquired by PQR, will now PQR Limited is allowed to claim deduction 80 double J double A? No. 80 double J double A basic concept is that employee must be new. So even if there's an amalgamate with another company, the appointed employee will be treated as old again. So they are not eligible to claim the deduction. XYZ Limited Private Limited, who is asking, Janki is asking, XYZ Private Limited is acquired, only management is changing, all other things remain same including employees. In succeeding year employed new employees, is 80 double J available? If only management is changing, and that will be it as a reconstruction, etc. So if it does not fall in the definition of reconstruction, etc., then you cannot claim a deduction. If it is a reconstruction, etc., then you cannot claim deduction. If it is not fall in the definition of reconstruction, reorganization, splitting up, then in case deduction can be claimed. So it will depend upon various factors. Again, if the new employment has been provided, then in that case deduction is going to be provided. Definitely they are eligible to take the deduction. So in your case, you are saying the management changing and all other things remain same. In that case, if the new employees has been appointed, new employee, deduction can be of course claimed. In manufacturing units, sometimes the employee turnover is high each year. The employee new one, Janki is again asking, employee new one and old left, is 80 double J available? This is not that easy, Janki, fine. Because we have just read it out, the eligible employee, those have salary less than 25,000. So they must left, those salary has less than 25,000. And the reappointment must be of those employee who have salary again less than 25,000. And again, a very important condition in that should not be a casual worker. It should be a regular worker. So it's not that easy that you can throw any regular employee whenever you want. It's not that easy. You cannot throw anyone out. You cannot retrench an normal employee without paying compensation, etc. They have power to go to the labor code, etc. So it's not that easy just to claim the 30% additional deduction. You're just rotating your employee every year. That practically is not possible. But as theoretically, if you are saying that somebody is doing that, then yes, they can claim the deduction if the other conditions are fulfilled. Of course, they can. The provisions say, again, Namita is asking, sir, in QQB, will whole amount of expense allowed from royalty income or 15% of expenses allowed as... No. Your question is not clear to me actually. In 80 QQB, will whole amount of expense allowed from royalty income, whatever will be the eligible amount coming after taking the remitted amount, and the amount has been 15% of books sold, whatever the lower value, out of that value we can deduct the expenses we have done for that book. Whatever that expenses will depend upon the question. And we just solved a question in which 40,000 rupees was there, so we deduct the 40,000 rupees to find out the value of deduction. Okay, so these are the questions. You should try, of course, all the questions. I prefer please go through these questions, solve them. Like in this chapter, like deduction chapter, a lot of examples, of course, and a lot of questions Institute has made for you. So kindly go through that, solve it. It will really help you to understand the topic nicely and more brightly. So we are moving to our section 10AA, of course. Tax holiday for units established in special economic zone under section 10AA. What happens? Let me tell you the concept of SCZ. What is the SCZ? What is FTZ, etc. It's a very interesting thing. You should know what is the meaning of that. Technically, we can say that SCZ are kind of a tax holiday place. There's a place we can call them tax holiday place. Like why and how? What happens generally, a businessman, if you are a businessman, imagine if you are a businessman, you want to start a big business, you are doing a big business, you want to start a new unit, etc., etc. So as a business, we need some things like material availability easily. We need, of course, machine easily. We need man, of course, manpower to do business. There are a lot of more things we need to do a business in nowadays. We need good transportation facility for national and international, of course. We need security for our business, of course. We need electricity proper. We need proper infrastructure. And one more thing is very important, that is we also need that government department should be there, so we can take approvals, etc. easily. If I'm business in some area and the government departments or ministry offices are in some another area which is very far in some capitals, so it will be difficult to get approvals of each and everything. So to start a business, to operate a business, these all things are really mandatory in today's scenario, because business is going to be global, it's going to be international. So you have man, machine, material, these are basic things, but you have to have good transport, security, electricity, infrastructure, government authorities, etc. So if you will think that where we can find these all things together in a city, so these are generally metro cities, like they say, we can say Delhi, we can have each and every ministry office over there, you can get any approval, transportation is great, etc. We can find each and everything, like Chennai, like Mumbai, etc. So there are, of course, there are cities from where we can find all these things easily. Now understand, if you want that any city, if any state need to be developed, then there's a very important thing we need, and that is manufacturing units. If there's a manufacturing unit available in any city, etc., then that place automatically going to be developed. We can provide employment there, revenue collection will be increased, and government will help you in each and everything. So take an example, like in earlier, like before 40, 50 years before, Delhi was like this, and everybody wants to establish their business in metro cities. Take an example of like Delhi. So all factories, units actually taking place in Delhi. And there is a nearby area like Ghaziabad. There are like Noida. There's some light issue, don't worry. There's a fluctuation there's some electricity problem in our city today, right now. Some happened actually. So you are able to listen my voice, that's important. Just listen my voice, see on the screen, the table what I'm teaching you, like Gurgaon, etc. Fine. So these are the places which is nearby Delhi, but there was no businessman interested in establishing their units, etc. So what was happening, all the business units actually going to be established there in Delhi only. So what the problem is going to be happen? The problem is happening is this, that everything has been, what's the rule of saturation? Like initially it was very good when some business units were there. Slowly, what was the benefit was providing by these industries is going to be advantages. Like the more industries came to Delhi, the pollution problem is arised, population problem arised, transportation problem arise, of course, so much of traffic jam, etc. So what was the benefit earlier was converted into the disadvantages. So government decided that what we should do, we should ask people to open your units in nearby places like Delhi, Ghaziabad, Gurgaon, Noida, etc. But people are not listening it. So department or income tax department does this, that if you are opening a unit in Gurgaon, Ghaziabad, Noida, or in some places, we will declare it like special economic zone. You can have your profit exempted for next 10 years. This is the huge advantages provided by the government. So due to these advantages, people are trying to shift their units into these places. So what happened? The saturation, the problem of Delhi is quite controlling, and the other cities or the other places nearby Delhi is going to be developed. So now you can say Gurgaon is like the beautiful place. You can see that, you can compare it to foreign countries, of course. Ghaziabad is having all these kind of condition also, and this the same condition case of Noida. So this was the concept of special economic zone. What exactly happened over here? Back to our notes. Tax holiday is the special economic zone, a deduction of profits and gain from which we derived by an assessee being an entrepreneur from the export of articles or things or providing any services shall be allowed from the total income of the assessee. Assessee who are eligible for exemption. Exemption is available to all categories of assessee who derive any profit and gains from an undertaking, being a unit engaged in the manufacturing or production or articles or things or provisions, any service. Such assessee should be an entrepreneur. Referred to in Section 2J of the SCZ Act 2005, a person who has been granted a letter of approval by the Development Commissioner. So these are the person, those are eligible for this exemption. Clear? Essential condition, it has begun to manufacture or produce articles or things or provide any service in SEZ during the previous year relevant to assessment year 6-7. So SEZ is nothing, it's a place which is declared by government to get benefit from the tax purpose. And it's not like this, that whole Noida, whole Ghaziabad is SEZ. No, a certain place has been prescribed by the government. If you open your unit in that specific place, then you will be able to get the tax advantages in case of income tax, in case of GST, etc. So more people will do what? If I'm trying to open my unit in Delhi, now I'll shift it to Gurgaon, Noida, Ghaziabad, because I will get the tax advantage. And the tax advantages are huge. You can have your profit exempt for next 15 years, what we are going to discuss. The assessee should furnish in the prescribed form before the date is specified in Section 44AB, 1 month prior to the due date of furnishing of the return of income, of course. A report of the, of course, who? Chartered accountant. Your report is valuable. If you will report, if you will sign, only in that case, the benefit is allowed, of course. Period for which deduction has been claimed, I just told you, deduction time period is 15 years. It has been divided into 3 parts. Like for first 5 years, you can have deduction of 100% of your profit exempted. For next 5 years, it will be like 50%. And for next further 5 years, again 50%, provided you have to transfer some amount into the reserve. A special economic zone reinvestment allowance reserve should be created. So the amount which will be debited into that reserve, that can be allowed as a deduction under Section 10AA. So for last 5 years, like for first 5 years, you can get 100% deduction. For next 5 years, you will get 50% deduction. But for last 5 years, from 11th to 15th year, deduction will be available, but you need to fulfill some more condition. So first is 100% of profit and gains derived from the export of such article or things or from service for a period of 5 consecutive assessment year, beginning with the assessment year relevant to the previous year, which the unit begins to manufacture or produce. 50% of such profit and gains for further 5 assessment year, you will get the deduction. So much of the amount not exceeding 50%. This third duration of 5 years is very important because it has a special provision. It has a special amount of reserve you need to create. Is debited to the profit and loss account of the previous year in respect of which the deduction is to be allowed and credited to a reserve account, to be called the Special Economic Zone Reinvestment Reserve Account, to be created and utilized in the manner laid down under Section 10AA2 for the next 5 consecutive years. So for the last 5 years, you have to create a reserve, and the reserve amount need to be utilized as per a specific purpose. What are the specific purpose? How are we going to utilize it? We will read it, of course. Our explanation below Section 10AA1 has been inserted to clarify that amount of deduction Section 10AA shall be allowed from the total income of the assessee and computed in accordance with the provision of the Act. So 100% of undertaking from 8 to 9 to 12-13, 50% from 13-14 to 17-18, and balance 15% from 18-19 if a specific condition has been settled. Condition to be satisfied for claiming deduction for further 5 years, that is after 10 years. These are the special conditions. We already knew that you need to maintain a special economic zone reserve account to avail this benefit. And that reserve should be utilized as per the specified manner. You have to utilize the amount transferred to that reserve within 3 years to purchase new plant and machinery for the benefit of business. And that details should be submitted with your income tax return is going to be submitted. So if within 3 years, department does not get that information of new purchase of plant and machinery, what will happen? What will happen? Income tax always does the same thing. It is going to taxable the deduction you have claimed in earlier year. So conditions to be satisfied for claiming deduction for further 5 years. Subsection 2 provides the amount credited to Special Economic Zone Reinvestment Reserve Account is utilized. Where it should be utilized? For the purpose of acquiring machinery or plant which is first put to use before the expiry of a period of 3 years following the previous year in which the reserve was created. So assume we created the reserve in previous year 21-22. So within next 3 financial year, 22-23, 23-24 and 24-25, we need to use that reserve for purchase of plant and machinery, and it should be put to use also. Until the acquisition of machinery or plant as aforesaid, for the purpose of business of the undertaking. However, it should not be utilized for. You can utilize that amount for the purpose of business, but you cannot utilize it for these 3 purposes. Distribution by way of dividend, you cannot distribute dividend out of that amount of reserve. For remittance outside India as a profit, you cannot do that. For creation of any asset outside India, you cannot do that. 3 things. You can use it for business, but ultimately within 3 years, you need to use it for purchase of plant and machinery. The particulars as may be specified by CBDT, etc. These are certain conditions. You can read it, of course. Consequences of misutilization, non-utilization. What will happen? I just told you what will happen. What government will do? What income tax will do? Income tax do one thing. If you misutilized it, it will be going to be taxable in the year of misutilization. Of course, if you not utilize it, then you are going that amount going to be taxable in the year 3-year expire, of course. So where the amount credited to the special economic zone reinvestment reserve account SEZ RRA account has been utilized for any purpose other than those referred to in subsection 2, the amount so utilized shall be deemed to be the profit in the year in which the amount was so utilized and charged to tax accordingly. That means in the year of misutilization, that is going to be taxable. Has not been utilized, so government will wait for your 3 years. So if you have not been utilized up to 3 years, then after the 3 years, in the next succeeding year, that is going to be taxable. The amount not so utilized shall be deemed to be a profit in the year immediately following the said period of 3 years and be charged to tax accordingly. Computation of profit and gain from export of such undertakings. How we will calculate the deduction amount? There is the formula. It's a very simple formula. That is profits of units in SEZ. What is the profit from that SEZ unit? Multiplied by export turnover of unit SEZ divided by total turnover of units of SEZ. Export turnover means the amount you have remitted out of your export sale. Do not confuse it with the amount of sale you exported. No, the certain amount you have remitted up to 30th September of the previous year, of the assessment year, sorry. In that case, that amount will be considered as your export turnover. For our financial year, previous year 21-22, if I have done export sale in previous year 21-22, then up to 30th September 22, whatever amount has been remitted into India out of that export sale will be treated as export turnover. Here's a definition, meaning of export turnover, of course. It means the consideration received in India or brought into India by the assessee in respect of export by the undertaking, being the units of articles or things or services. However, it does not include freight, telecommunication charges, insurance, attributable to the delivery of the articles or things outside India, or expenses incurred in foreign exchange in rendering of services outside India. These are again the clarification, you can read it. Conversion of EPZ, FTZ into SEZ. So if it is converted a EPZ, FTZ into SEZ and you have completed compliance the specified condition, then for balance number of year you can claim the deduction. Where a unit initially located in any FTZ or EPZ is subsequently located in SEZ by reason of conversion of such FTZ, EPZ into SEZ, the period of 10 consecutive assessment year referred to above shall be reckoned from the assessment year relevant to the previous year in which the unit began to manufacture, which unit which was in FTZ and EPZ, or produce or process such article or thing or service in such FTZ or EPZ. Okay, so restriction of other tax benefit, of course, in order to claim deduction in this section, the assessee should fund a report from a chartered accountant. That means you. During the period of deduction, depreciation is deemed to have been allowed on the asset. Of course, WDV shall be counted after claiming the depreciation. No deduction section 80IA, 80IB claim. Of course, if you have claimed any profit in section 10AA, you cannot be claiming 80IA, 80IB or vice versa. The condition down in section condition led to be done in section 80IA, where any goods or service held for the purpose of eligible business are transferred to any other business. The same provision we have read actually in deduction provision also, that if you have transferred that business, then the value of that business, the transaction value should be taken as the fair market value. Where any goods or service held for the purpose of eligible business are transferred to any other business carried on by the assessee, or where any goods or service held for any other business carried on by the assessee are transferred to the eligible business, and in either case, if the consideration for such transfer is recorded in the accounts of the eligible business does not correspond to the market value thereof, the profit eligible for deduction shall be computed by adopting market value of such goods or service on the date of transfer. In case of exceptionally difficult in this regard, the profit shall be computed by an assessing officer on a reasonable basis as he may deems fit. Again, if the deduction has been claimed over here, you cannot claim it any other section. Deduction allowable in case of amalgamation and demerger? Yes, of course. For the balance number of year, it can be claimed. In the event of any undertaking being the unit which is entitled to deduction under this section being transferred before the expiry of the period specified in this section to another undertaking being the unit in a scheme of amalgamation or demerger, what will happen? Of course, the amalgamating company cannot claim that deduction. After amalgamation, the amalgamating company cannot claim that deduction. The demerged company cannot claim the deduction. So who can claim deduction? Of course, the amalgamated company or the resulting company can claim deduction, assuming as if amalgamation or demerger has not taken place. So that means the resulting company, or we can say the transferee company, the amalgamated or resulting, they are transferee company, can claim the deduction, assuming that what will be the deduction amount if the amalgamation has not taken place. In the event of any undertaking begins the unit in which entitled to deduction under this section being transferred before the expiry of the period specified in this section to another undertaking. You can see the light effect, of course. Yeah, Christmas is coming, New Year is coming, so our light is doing like this. So just relax, listen what I am saying, fine? Being the unit in a scheme of amalgamation or demerger, no deduction shall be admissible under this section to the, of course, amalgamating or the demerged unit, because they cannot use this deduction anymore for the previous year in which the amalgamation or the demerger take place. The provision of this section would apply to the amalgamated or resulting unit as they would have applied to the amalgamated or the demerged unit had the amalgamation or demerger had not taken place. So that were the notes what we were going to cover, and we just covered it in a timely manner. So that was all. Always says that is revise twice. That's my advice to make you wise. You will do this. You will do this definitely. It will help you. So before starting the MCQ test, because I have covered in next 10 MCQ questions the provision from section 80C till section 10AA. So I just wanted that we should revise these all provision quickly, so you will be eligible to give the MCQ test easily. Before that, let me see the queries. If somebody has asked something, I need to explain it. Sir, in section, Namita is asking, sir, in 10AA, explanation 1, deduction cannot exceed total income, but in section it is written that deduction 100%, 50% profit. Both are contradictory. No, it's not contradictory. Of course, it's separate. You are confusing, you are correlating them. It's just like this, like we can say that we need to on a TV with a remote, and you are trying to on the TV with a remote, and you are saying, Mom, it's not opening, Dad is not opening, because you are using AC remote to open that TV. So TV is going to be on by a remote, but not that AC remote can be utilized to on that TV. So you are technically mixing those separate provision, and I'll tell you what is exactly happening. Section 10AA explanation 1, deduction cannot exceed total income. Deduction cannot be total income, but in section it is written that deduction 100% or 50% of profit. So section 10AA is specifically for a unit which is located in special economic zone. So that is only a unit or a business entity which is in special economic zone. So if your business that is eligible for this deduction, for example, it has 50 lakh rupees profit, and 50 lakh has been going to be allowed as a deduction out of GTI, not section 10AA. It will be available you out of GTI. Once you need to calculate the profit, then you need to find the deduction, then it will be claimed. So this deduction of section 10AA will be eligible only out of that unit income, which is in SEZ and which is fulfilling all these conditions. This deduction cannot be claimed out of any other income. So if your GTI is like 5 lakh and this deduction comes to like 6 lakh, you cannot claim it more than 5 lakh. And that 5 lakh is not TI. You should take the business. If business income is 3 lakh of eligible business, deduction cannot exceed 3 lakh. That will be only up to rupees 3 lakh. So let's revise quickly once all the provision, and very quickly. I'm telling you very quickly. You are a final student, so I can expect you that kind of intelligent that we are going to revise it quickly, very quickly, and then we'll move on to our MCQ test. Fine. Are you ready for MCQ test? Today MCQ test is really good because it will cover from section 80C till 80U and section 10AA too. So first was section 80C. We discussed the section 80C, and there are certain payments for which you can claim section 80C deduction. There are certain special payment for which you can claim deduction 80C, and they were like unit link insurance plan, life insurance policy. We have SPF, PPF. We have tuition fees of children, of course. We have Keyman insurance policy payment provision. We just discussed over there. Payment for contract for deferred annuity plan, we discussed there, the superannuation fund, etc. So what you need to do for section 80C, you should read it, you should make a short note and write down all the headings. So that will be enough. But in some cases, if there are some important provision like 15%, 10% of premium will be allowed as deduction, you should specifically note them also. So section 80C will technically combine a lot of payments. So you have to read it. You have to learn them like this. So that was section 80C. Then we move on to section 80CCC. 80CCC for pension fund. So if an assessee is paying some amount to the pension fund, then that can claim deduction of section 80CCC up to rupees 1,50,000. 80C was 1,50,000, 80CCC was 1,50,000, and 80CCD1. That all three combined together can claim a deduction up to rupees 1,50,000. So 80C, there are certain kind of payments. You have to read it. You have to learn them, of course. Then section 80CCC. 80CCC is for certain pension fund. If you are taking a pension scheme of LIC or any other insurer and you are paying premium on that, then you can claim up to 1,50,000 rupees as a deduction under section 80CCC. Then we have 80CCD, which is for NPS scheme. So in case of NPS, there are two provisions. Either you are an employee, either you are a self-employed person. If you are an employee, you will get deduction up to 10% of salary, or if you are an other than employee, then you will get deduction of 20% of GTI. And if you are an employee, then you can claim deduction section 80CCD2 also for the payment made by employer, which is 14% if payment is central government and other 10%. So CCD has one section 80CCD1 and section 80CCD1B also. 1B is giving you deduction of extra 50,000 again. So this was 80CCD1, like 10% of salary and 20% of GTI. Then we have 1B, we provide 50,000 deduction. Then we have 80CCD2, which do not have any such kind of amount limit. It has limit only 10% of salary or 14% of salary. So we are going very fast. Okay. Now moving to 80D. 80D is very important. Today I made MCQ on 80D also. Fine. So 80D says medical insurance premium and medical treatment also. So it says if you yourself, your spouse or your child, and that child should be dependent upon you. If you are paying premium, that deduction will be allowed up to 25,000 rupees, or for parents, whether they are dependent or independent, 25,000 more. In case of any one of them is senior citizen, it will be increased to 50,000. For a health checkup, there is 5,000 rupees deduction is allowed for all of them, and that is also other than check. We can make that payment in cash. For any other case, except health checkup, you have to pay via account pay check, etc. So deduction is tax premium. Again, if senior citizen does not have insurance premium, then 50,000 deduction can be claimed for their medical treatment. So this deduction has a lot of things, it's like a mixed veg. It has include everything in the same deduction. So this is income tax. It is like this, of course. So that's why it's value. If you have the knowledge of income tax, that means you know each and everything, because you need to correlate every provision to understand as a whole. I personally feel when you must be in your intermediate or IPC and you must be reading provision, and now when you are reading it in final, you must be correlating a lot of provision what you might not have been understand it that clearly when you were in intermediate level, because income tax is like this. A single section is connected from section 10 and it will be connected to somewhere else. So that's really amazing thing of income tax. And just because it is that difficult or confusing, that's why it's very valuable. If you have the good knowledge of income tax, that's really going to be very good for your future, of course. So 80D was medical insurance premium. Then we have 80DD, which was a handicap. We discussed you can claim 75,000 or 1,25,000 for a relative who is wholly dependent upon you for any medical expenditure done on his maintenance, etc. That's a fixed limit, of course. 80DDB for our medical treatment. If you are suffering from a specified disease, I pray it should not be like this. You should not suffering from any diseases. But if someone is suffering from specific diseases and has incurred some expenditure on medical treatment, then he or she can claim deduction up to rupees maximum 40,000, or if in a senior citizen, it can be rupees 1 lakh rupees directly. 80 is for education purpose, of course. Education, if you have taken an education loan, then any interest paid on that education loan up to 8 years from the date of repayment can be claimed as deduction under section 80E. That is for education loan purpose only. Now we have 80EE. 80EE is for housing loan, of course, and it is applicable if you have taken a loan from previous year 16-17. So value of house should be less than 50 lakh, loan sanction value up to 35 lakh rupees, then you can claim extra 50,000 deduction over an extra amount of, as you are claiming in income from house property. Remember, this is over an excess limit of 2 lakh rupees as you have claimed in income from house property. Next section, it says 80EE. 80EE says that if you have taken a housing loan, and if that housing loan, just a second, if you have taken a housing loan and that if that housing loan has been sanctioned between 1st April 2019 to 31st March 22, and the stamp duty value of the house is equal to or less than 45 lakh, then you can claim this deduction, provided you should not own any other residential house as on that date. Quantum reduction is increased up to 1,50,000 rupees. 1,50,000 rupees you can claim extra interest under this section till the repayment of loan. In every year you can claim 1,50,000 rupees as a deduction. 80EE stands for loan taken for electric vehicle, of course, and it will be 1,50,000. It's also for interest value. So if you are paying interest on repayment of loan taken for electric vehicle, 1,50,000 can be claimed as a deduction. So we are on a roller coaster of deductions. We are reading each and every deduction, just need to revise you. And it will really helpful, of course. 80G, I have told you there are 4 kind of funds you can pay: the 100% fixed, then 50% fixed, then 100% variable, and then 50% variable. And there are certain funds like we know 50% fixed, there are 4 funds, then we have 2-3 funds in 100% variable, and then 50% variable have some fund. Balance will be fall in the category of 100% fixed. Donation should not be in kind, it should be in other than kind, of course. If you are falling in condition C or D funds, like for 50% variable or 100% variable, then you cannot claim deduction over and above qualifying limit. So we have to find out the qualifying limit for C and D case, both combined. How to find out the qualifying limit? You have to find out the adjusted GTI. You need to take the GTI and then deduct long-term cap gain 112, 112, 112A, 111A, all other deductions which are already been deducted except 80G, etc. Then you will find it out the adjusted GTI. So 10% of that adjusted GTI and the amount paid in 50% and 100% variable fund value, whichever is lower will be taken as a qualifying limit. Then you need to find it out how to find a deduction of section 80G. 80G is for rent paid for residential purpose. So if you are paying any rent for residential purpose, you can claim deduction under section 80G. There are three amounts. You have to find out the lowest of all these three amounts. First one was 5,000 rupees per month, then rent paid minus 10% of adjusted GTI, and then 25% of adjusted GTI. Whichever is lower will be allowed as a deduction to you. That was 80G. That is 80GGA. There's a deduction in respect of donation for scientific research or rural development. If you are carrying a business, you can claim this deduction in your PGBP. But if you're not carrying a business, then you need to claim that deduction out of your GTI. Again, cash deduction is allowed only 2,000 rupees, whether in section 80G or whether 80GGA. GGB and GGC we just discussed today. Of course, if you're a company or you're paying donation to political party or electrical trust, you can claim deduction. If you're an Indian company, deduction should not be in cash. Other than Indian company, you can claim it if you are not a local authority and if you are not an artificial judicial person who are partly or fully funded by the government. That then we discussed income-based deduction, 80IA, that is for infrastructure facility purpose. You can claim deduction for 10 years out of 15 years, or you can claim deduction for 10 years out of 20 years in respect of these undertakings or these business structures. You have to fulfill some condition, of course. We have already discussed that. IB is talking about 100% deduction, of course. Being a developer of SCZ, of course. IAC discuss about the 100% reduction for 3 consecutive years. If you are an eligible startup. Next was 80IB. It has 3 kinds of business, that industrial taking, including a small scale industry in SSI, in Jammu and Kashmir, mineral oils or commercial production of natural gas, of course, and the undertaking driving profit from the business of processing, preservation and packaging of fruits, vegetable, etc. They all have their separate provision, like 100% profit exempted for 5 years, and for next years they are 25%, of course. Then after 100% for 7 consecutive years, and for this fruit and vegetable purpose 100% for 5 years, and for next 5 years is 25%, and if you are a company then it will be 30%. 80 IBAs of our housing project and renting housing projects. I have told you it's a very wonderful deduction has been made by department to technically encourage the builders to complete their property within a certain limit of time, that is 5 years from the date they get the completion, they get the approval from the competent authority. And what will happen? The profit they are driving from this business will be allowed as deduction 100% if they fulfill the condition prescribed in section 80 IBA. These are the conditions. We read it out, of course. Now 80I is for northeastern state, that was Arunachal Pradesh, of course, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim and Tripura. I just told you a trick. So how can you learn these 8 states' names? So if you learned it, very nice. If you didn't, please find your trick to learn all these things. The reduction is 100% of profit. This is a diagram. I told you it's very wonderfully drafted for your help. Section 80JJ was for the businesses, that was for processing of biodegradable waste, and your profit for 5 years will be allowed as deduction if you involved in this business. JJAA was for new employees, of course. So if you are in a business and you are appointing new employees, those are those having salary less than 25,000. Those are not government employee, those are not casual workmen, those are employed for 240 days or 150 days respectively in a year. And if they are appointed less than for these year, then the deduction can be claimed in next year if they have been appointed in the next succeeding year for 240 or 150 days requirement. Applicable to all assessee, those have done tax audit, of course, section 44 AB. And 30% of that amount can be claimed as a deduction. ATL is for income of offshore banking units and international financial service center. If you are earning these incomes for the specified assessee, then that can be claimed as deduction, 100% for 5 consecutive assessment year and thereafter 50% for 5. For IFSC, it is 100% for 10 consecutive assessment year out of 15 years. Intercorporate dividends, I told you, if you're a domestic company, you are receiving any dividend from domestic, foreign or business trust, then whatever amount you received as a dividend and whatever you have declared during the year as a dividend, the lower will be allowed as deduction section 80M. It's a very simple deduction, but it's very important for examination. 80Ps for societies, of course, 100% deduction shall be allowed in respect of profit and gains attributable to any one or more of the following activities to a society engaged in specific activities. It is a lot of provision. You can read it, of course. Producer companies, of course, they are also having 100% deduction if they are involved in certain specified kind of business and earning a specified kind of income. QQB was deduction in respect of royalty income, etc. of authors of certain books other than tax book. So they can claim deduction up to rupees 3 lakh rupees or the amount as royalty as per the provision, whichever is lower. 80 RRB is for royalty income on patents, and here also deduction amount is 3 lakh rupees. 80 TTA is for interest, saving account interest, that is deduction up to 10,000 rupees. And if you are a sales citizen, then 80 TTB will be applicable, and deduction on interest on saving account as well as FDRs will be allowed up to rupees 50,000 rupees. So there is a lot of benefit of being old, of course. If you are old, if you are thinking, oh, I am going to be 60, don't worry. Income tax has given you a lot of exemption benefit if you are 60. So there is at least something good to be old, like a senior citizen. Other deduction, 80U, we discussed like a person with a disability. So these were the deduction, what we were talking about. Now moving on to our, of course, tests. So I hope you all are ready for the test provision. Let me share the sheet with you. Okay, so here are specific tests, what we always talk about. So I hope you all are ready for test. I suggest you please have a paper and pen, because there are some questions you need to calculate something. So it's better you should have a paper and a pen to calculate the deduction, because today deductions and MCQs are not as simpler, not easier as our last session. So let's get started. So please answer me, and whenever you answer, please write the question number and the right option. That will be really easy to understand which question MCQ answer you have just given. So that is MCQ number 1. Mr. Ram has taken the life insurance policy on his own name on 1st April 2021. The capital sum assured is 20 lakh. He has paid insurance premium of rupees 3 lakh during the previous year. He is eligible for deduction of section 80C amounting. You have to find it out in this question. How much deduction can Mr. Ram avail under section 80C? You might be feeling this is the same question I asked in last session, but I have made a lot of changes in it. So please do read it carefully. I always said, please do read it carefully before giving your answer. So kindly tell me the answer. I am waiting for your answers. Let's see who will give the answer first. Come on. I know you can give the correct answer. Please. Any answer? I know it's not easy. You are final students, you are future chartered accountants, and I can expect a correct answer from you. So, Janki Bhatt is saying B. Okay, Geeta Kalidas is saying again B. Naveen is saying A. More? I want more answers. Do it fast. Somebody is saying B, somebody is saying A. I need more answers. Okay, one more answer. It's saying B. Before answering any question, you should think about the provision first. This is the right way to answer anything in your examination or anywhere. You have to think it before you speak, before you try to solve it. Just think about the provision. Then you'll be able to find out the provisions and the correct answer. So you should take your time, but give me the right answer. Understand? Okay. So the correct answer of question 1 is, of course, A. It's not B. It's not B. It cannot be B. Somebody saying D. How can it's possible? It's A. Why it's A? Because the provision says that in this case, we need to take 10% of capital sum assured or premium paid, whichever is lower. So it is 2 lakh rupees, correct. But what I was asking, I am asking deduction eligible in section 80C. So 80C cannot exceed 1,50,000. You are right, your eligible amount is 2 lakh, whichever is lower. But how can you claim deduction section 80C 2 lakh rupees for insurance premium? The 80C has its own maximum exemption limit, and that is rupees 1,50,000 only. Please, those are giving answer B. Please read it carefully. The correct answer is 1,50,000 because I was asking deduction amount under section 80C and that cannot exceed 1,50,000. Understood? Okay. Next question. Question number 2. Mr. X has incurred medical expenditure on life of his minor son, who is wholly dependent on Mr. X suffering from severe disability in financial year 21-22 for rupees 15,000. He is eligible for deduction under chapter 6A amounted. You need to tell me what amount deduction he can claim under chapter 6A. Think. The process is, let me tell you, what is the process of answering a question? First of all, understand the question. The second is, just think about the provision. Whatever you know, think about that provision. Then implement it into your question. Then you will be able to find out the correct answer. So, please write it down the question number you're answering because I'll be confused if you're not writing, if you're only answering me option B, C, D, how I will understand that is question 1 or question 2 or question 3. Please understand what I'm saying. So question number 2, what is the correct answer? We need to see what students are saying. Somebody is saying B, somebody is saying A, somebody is again saying B. Narendra Rao is saying A, I guess. And Janki Bhatt is saying B. More? What is the correct answer? I'm waiting for your answers. Give me fast. Yes, you can do it fast. Okay. 4 answers came. Somebody saying D and somebody saying B. So first of all, what we should do, we should read the question correctly. So what the question is saying, Mr. X has incurred medical expense on the life of his minor son who is wholly dependent on Mr. X having severe disability. So that means I am giving you hint that somebody is wholly dependent and severe disabled. So what section is going to be implemented? Section 80 double D, which is for handicap. Those are relative and wholly dependent upon us. So in that case, the provision says either you will be allowed to get deduction of 75,000 or 1,25,000 irrespective of actual amount of expenditure. So in that case, because I have written severe disability, that means that Mr. X can claim deduction up to rupees 1,25,000. Correct answer is B. Those are giving correct answer. High five from Wi-Fi. Okay, moving on to our third question. Deduction under section 80 GGC is not available to following if all other conditions are satisfied. You need to tell me deduction under section 80 GGC is not available to following if all other conditions are satisfied. You have to answer me and very quickly because it's a very simple question for you. Keshav Prasad was saying C and now he's saying B. Okay, good, no problem. Namita was saying B of question number 2. Question number 3 answer I need now. Give me question number 3rd answer. What is the correct answer of question number 3? Question 3 is very simple. Let's see. Yes, please give me the correct answer and quickly. Naveen is saying C. Surya is saying C again. And Priya is saying C again. Everybody will be saying C because C is the correct answer. Congratulations. It's very simple. There's nothing there. Fine. So next question number 4. Yeah, please read it carefully and then answer me. It's very interesting question. Mr. Manish pays 21,000 as medical insurance premium by check. By check, okay? Under a scheme framed by GIC, General Insurance Corporation, of course, for his mother, age 65 year and resident. And also paid 26,000 for his wife for the same. For same, that means medical insurance premium. Expenditure of preventive health checkup also incurred for 8,000 rupees. So 26,000 for medical insurance premium and 8,000 for health checkup. What is deduction allowed in section 80D to Mr. Manish? This is very good. Take your time and give me the correct answer. Let's see who will give the correct answer of this question. Yep, anyone? Read it carefully. Take your time. It's good to take 3 minutes and give me the correct answer, rather than it's taking 2 minutes or 1.5 minutes and giving me the wrong answer. That will be no use for me or for anyone. Take your time, give me the correct answer. Question number 4. What will be the correct answer? What will be the correct answer? So what is going to be the correct answer? Okay, somebody said, Janki was saying, Priya was saying no, okay, Janki was saying A, Priya is saying C, Geeta Kalidas Patel is saying B, Janki but again saying C, and Naveen is saying D. So good, very good. You have all a different answer. All of you are given different answers. Somebody saying A, B, C, and D. Oh wow! I got all the answers of an MCQ. Great, very good, very nice. You are really doing good. Extra hard work for that. Okay, more. You should implement the provision. You should know how to implement the provision into our question. Then you will be able to answer correctly. Okay, and Naveen said D. Surya is saying B. The correct answer is B. The correct answer is B. You know why? Let me tell you why. Like Mr. Manish pays 21,000 as medical insurance premium for check for his mother, age 65. That means senior citizen. So what is the senior citizen limit to claiming this deduction is 50,000. So 21,000 is of course eligible for mother, of course. For wife, he has paid 26,000. So what is maximum limit for a wife we can claim? That is 25,000. So this was 21 plus 25, but there has been a expenditure of 8,000 rupees also for health checkup. So maximum we can claim out of this is 5,000. So for whom we should claim it? Can we claim this 5,000 for wife head? No, because limit has been exhausted. We can claim this 5,000 for the mother. So technically now mother can claim because she has the limit of 50,000 rupees. Only 21 has been exhausted. So she is now claiming 26,000 and wife is for 25,000. So Mr. Manish can claim total 51,000 as a deduction. So the correct answer is B. Bingo. Correct? So you should read it. This is final. Questions are not going to be easy. Okay. So moving on to our next. This is next slide. Question 5, deduction in respect of profit and gain from housing project, rental housing project, allowed under section 80 IBA is 10% of the profit and gains deriving from such business. Housing project, 100% of the profit and gains derived from such business housing project, 10% of the net profit and gain derived from such business, 100% of profit and gains derived from such business. You have to read it very carefully, and you'll be able to understand the difference. Let's see what is the correct answer you are going to give. Question number 5. We are on question number 5. Answer it correctly. As I told you, I have uploaded the 80G and double G question also on portal today evening, I guess, before class, 15 minutes before class. And I also uploaded the correct answers of last session MCQs. I will upload this session MCQs correct answer tomorrow. You can download it and you can check it out. So this will be our last session, and I hope we will meet soon, of course. Question number 5. Give me the correct answer. Question number 5. Somebody has given the correct answer. Namita is saying D. I guess Narendra is also saying D. Janki Bhatt is saying D. Read it carefully. Please read it carefully. Sometimes it happens in MCQ that you do not get the exact correct answer. So you should opt the best answer. You should not, might be you should not get the correct answer, exact answer what you want. So out of the option you have to find out the best out of those four options. So please remember it and answer this question wisely. So answer is, everybody is saying D, 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 and the correct answer is, of course, B, not D. Because such business can be of any kind of, like we need the business which is for housing project. Deduction in respect of profit and gain from housing projects or rental housing project allowance to 80 IBA. What? You can read it the section. It has been mentioned that housing project profit and gains will be allowable as deduction, not such business. It should be a business of housing project. That is only allowable. So you might be thinking that 100% of profit and gain right from such business is also correct. But out of these four, if you will find it out, the most precise, the most correct answer is option B, because it has also written that such business housing project. So that is going to be the correct answer. The correct answer will be B. Somebody is saying B correct. Namita is saying B, very good. Wi-Fi from Hi-Fi, sorry, Hi-Fi from Wi-Fi. Surya Ludi is saying again correct. So you should understand the correct answer. You need to find it out on the basis of option you have. Okay. Okay, moving on to next question. Question number 6. Again, do it or find the answer correctly. Take your time. Mr. A commenced business in previous year 21-22 and appointed 150 regular employees, salary at 24,000 per month. As on 1st June 2021, and 120 employees on 1/5/21, salary 22,000 per month, casual employees. So we appointed 150 regular and 120 casual on the different dates. So please find out the deduction allowable for under section 80 double J double. Question number 6. We are just 5 questions left, or 4 questions after this. A commenced business in previous year 21-22 and appointed 150 regular employees, salary 4,000 per month. So we need to find out the deduction under section 80 double J double. Question number 6, correct answer. Oh, Mr. Naveen has given the answer. Like one, he's saying the correct answer is C. Okay, more to come. Let's see. Let's see. Fast, students, fast. You are not in foundation, you are in final. You have to be quick. Somebody gave answer. Priya has given answer B, option B. More answer to come. Okay. So Janki Bhatt is saying D. The correct answer is, students, C. The correct answer is C. How? It's like this. These employees has been appointed on 1st June 2021. So April and May, they do not get any salary. They do not get any salary. So we need to take 10 months salary. So 10 months into 24,000 into 150, and then take 30% of it. So the correct answer will be C option. Option C is the correct answer. Next question, of course. The maximum amount of deduction under Section 80 QQB in respect of royalty income of other than tax book available, need to correct the spelling, available to joint authors. Assume two joint authors. Assume there is a tax book other than tax book for which royalty has been received, and there are two authors of that book. So you need to tell me what is the maximum amount of reduction under Section 80 QQB can be claimed. 3 lakh rupees in aggregate. That means both of them can claim reduction, but maximum to 3 lakh rupees in aggregate. 150 lakh rupees each, 3 lakh rupees for each author, or their answer is none. So it's a very tricky question also. Question number 7, you have to proceed and you have to answer me. Question number 7, Janki Bhatt was saying A, that means 3 lakh in aggregate. Okay. Question number 7, what is the correct answer? Okay, this answer, Namita Goyal is saying C, Surya is saying A, Namita Goyal again is saying A. What is this? Why are you giving me two answers, Namita? C and A both. 3 lakh in aggregate, or 150 lakh each, or 3 lakh rupees each. 80 QQB say that is 3 lakh rupees available, reduction available 3 lakh rupees for each person. It is for individual base. 3 lakh rupees is not per book, but per assessee. So per assessee is 3 lakh rupees. That means both can claim 3 lakh rupees individually each. So it's not per book, it's per person. So the correct answer is C. Question 8. Mr. X received royalty for 4 patents, 1,50,000 each in previous year 21-22. What will be the maximum reduction that can be given to Section 80 RRB? 6 lakh, 150, 3 lakh, or 1,20,000? Question number 8, 2 more to go. And then we will all go for dinner. And you are going to have dinner, and then you need to study really hard to fulfill your dream. Mr. X receiving royalty is an easy question. You should answer it correctly. I believe you all will give me the correct answer of question number 8. So what will be the correct answer? Let's see. Let's see who has given me the answer. Okay. Priya is saying C, and Janki Bhatt is saying C, and Naveen is saying C. The correct answer is C, of course, because I told you, reduction Section 80 QQB and RRB both are for 3 lakh rupees per assessee, not per book, not per patent. So in aggregate, he can claim maximum 3 lakh rupees reduction. Question number 9. That's for Section 10AA, of course. X Limited is located in SCZ. From the following information furnished by it, compute its total income. Total turnover is 500 lakh. Export turnover is 400 lakh. Business profit is 50 lakh. Here export turnover represent export of computer at the rate 80,000 per computer. What will be the deduction section 10 AA if previous year 21-22 is third year of this unit? Question number 9, what will be the correct answer? The formula for that is I have told you that profit into ET upon TT. Profit of the such unit into export turnover of unit upon total turnover of unit. So you need to tell me what amount of deduction he can avail, section 10 AA. Question number 9. Who is going to give me the correct answer? So question number 9, nobody has given the correct answer yet. What happened, students? Are you sleeping? You want to sleep? Question number 9, okay, I have the correct answer. Janki Bhatt is saying D. Kalidas is saying, of course, D. And Namita Goyal is saying D, of course. The correct answer is D because the formula says 50 lakh into 400 divided by 500. So that will comes to 40 lakh rupees. Very good. Well done. Last question. Maximum tax holiday under section 10 AA in respect of newly established units in SEZ is allowed for a total period of. We all know the answer. I just need to listen from you that you should give me the correct answer. What is the correct option? We all know that. Do not give me wrong answer in this question at least. Come on fast. Janki Bhatt, in QQB it is written deduction up to 3 lakh being author including joint author. That means joint author also can claim deduction under section 80 QQB. But deduction amount is written that is 3 lakh rupees per assessee, not per book. So if there is a different author, then 3 lakh rupees can be available to each author. So that's the interpretation of that limit, of course. The joint author is not for limit. The joint author is for telling you that even joint author can claim deduction. But deduction amount is 3 lakh rupees per assessee, not per book. So that's why if you are 2 assessee, you can claim 3 lakh individually. As in same happen in case of income from house property in case of co-owners. Deduction limit is 2 lakh rupees, but if in case of co-owners, the house property, if you have 5 to 4 lakh rupees interest, then in case of co-owners, 2 lakh can be claimed by each person. That is not on the basis of house property, that can be available on the basis of assessee. Same is over here. Of course, the correct answer in this case, C. In case of 10 AA, we can claim deduction up to maximum 15 years. For 5 years, 100%. For next 5 years, 50%. And for balance 5 years, we can also claim it 50% by transferring a certain amount to the SEZ RRA account. That was an MCQ test. Well done. Very much. Thank you. You just did a very fabulous job, of course. So I personally feel you might have been getting the specific knowledge regarding the deduction, set-off, and clubbing provision. So please, a request from my side to all of you, please work hard, sacrifice your things and just be a CA as soon as possible. That is going to be the superb day for your life if you'll able to do it as soon as possible for yourself and for each and everyone. So I can pray for your bright future, and I can pray you to be a CA as soon as possible. So this was my last session. We covered set off, clubbing, and deductions. Hope to see you again very soon, and believe this, revise twice. That's my advice to make you wise. So good night, and please stay safe, stay healthy. COVID is still here. Good night, goodbye, take care. Thank you. Yeah, done, concluded. Thank you.